Welcome to Degens for a Brighter Future. My name is Jorge and I'm your host today. We have a lot of news today as Voyager files for bankruptcy, Celsius pays off a loan, and there's a lawsuit. Bitcoin has been on a nice run this week, and Thorchain has some awesome updates. This and more today on Degen News.
Welcome to Degens for a Brighter Future. Come join the degeneracy.
So for the first bit of news, I wanted to talk about Bitcoin, which has been on an incredible upwards trend and has been bringing the market up with it as well. So if we look here, it looks like BTC has been on a tear. Bitcoin was at a low of 19,370 earlier this week, and it ran all the way to 22,400. And it looks like we're testing this support right now, but we will see how the week goes on. We can also see that there was a pretty nice jump in the NASDAQ as well. So normally there's a correlation between Bitcoin and the traditional markets as well. I found a clip on CNBC where they spoke a little bit about why we are seeing this run in the market.
Yeah, you got to squint to see it, but there's a line in the Fed minutes that suggests all is not doom and gloom when it comes to the outlook for Fed policy. But before I get to that, I want to show you the doom and gloom that's in there for stock investors near term. The inflation fight is job one. The Fed is willing to accept slower growth, and the policy will go restrictive, may need to go more restrictive if inflation remains out of control. The minutes suggest a hike of 50 or 75 basis points coming at the meeting later this month. Little of that bodes well for risk assets until you consider this statement from the minutes. Quote, after the Fed hits neutral or just a bit beyond, quote, the committee would then be well positioned to determine the appropriate pace of further policy firming and the extent to which economic developments warranted policy adjustments. In other words, there's no guarantee the Fed may have to raise rates to punishing levels, and some chance they may not. If you look at what Peter Williams from Evercore ISI wrote yesterday, quote, the silver lining for risk assets is that the committee underscored that as policy gets to the vicinity of neutral, it becomes more data dependent again. Now, if you think inflation is going to stay sky high, then all of this is just wishful thinking. If you think inflation could come down and the economy will cool quickly, maybe the Fed has less work to do. That's what the market looks to be pricing in.
So why does this matter? Well, Bitcoin is still highly correlated to the traditional markets. This only shows the amount of exposure that institutions have to Bitcoin when we see such a strong correlation. Now, that being said, if you're expecting inflation to come down or be neutral, then this may be bullish for you, as it could signal a possible Fed that will be slowing down their rate hikes or not raising the rates as high as anticipated. We will see. However, for all you Bitcoin hodlers out there, congratulations on your 10%. 10% is nothing to scoff at. Sometimes 10% is all the stock gets in a year. Congratulations to the people who bought under 20K. So big news for Thorchain. Atom has now been integrated into Thorswap. Now, this is a big deal because now cosmonauts or Atom holders will be able to swap seamlessly between Atom, Ethereum, Litecoin, native Rune, and of course, Bitcoin. So it's a big win for cosmonauts and a bigger win for Thorchain. And this is excellent news. And Atom holders will also be able to earn yield on Atom. However, it has had a slight hiccup as Thorswap currently is temporarily not allowing the trading of the Cosmos Chain Atom token. Now, I feel quite confident that they'll eventually figure this out. It is built on Cosmos SDK, and Thorswap is built on Cosmos SDK. So I think it's only a matter of time before they figure this out. Now, that being said, just hold on a little longer, cosmonauts. I'm sure this will come to you guys soon. The next thing I wanted to talk about is this awesome update on Thorchain Thorswap, which is coming soon. It's currently not available, but DEX aggregation is coming. So actually, if you watch this video here, you can see how someone can swap from Bitcoin to SHIB. Because of the DEX aggregation, you'll be able to swap for the native tokens on Ethereum. And hopefully what this will lead to is that you'll be able to swap between these native assets and tokens on other chains once their DEXs are integrated into Thorchain as well. So this has been a really exciting update that could really make Thorswap a competitor to centralized exchanges. Finally, if we look at the performance of the Rune token, it is looking very bullish. Congratulations to the Thorchain Thorswap Thorchads out there. We saw a low of 177, 175, and it has ran as high as 250. Just an unbelievable tear going on, and this obviously has to do with Bitcoin going on a tear as well. But either way, congratulations to the Thorchads out there. Voyager Digital has filed for Chapter 11 bankruptcy in the Southern District of New York. In the filing, they said that they own between $1 billion and $10 billion in assets with an equivalent amount of liabilities. The company in there has stated earlier that they had about $1.3 billion in crypto and about $350 million in cash, which they hold for their clients. Unfortunately, Voyager has suffered. This is an ongoing issue where Voyager has lost about $650 million due to a loan they had given out to Three Arrows Capital, which still has yet to be paid. Keep in mind in my Instagram video that I mentioned that Three Arrows Capital did in fact have liquidity issues when the Terra Luna UST collapse occurred. So this is still kind of a chain of events that came from Terra Luna. That being said, it's very odd that they filed for bankruptcy so soon, considering that they had halted withdrawals, deposits, and trading just last week. So this, at least to me, this is not looking good. They also said that they are doing this due to the current market conditions and are doing their best to continue to look into different options and try to compensate their customers. They have mentioned that they are doing a restructuring plan. If we actually look here, it says if all goes according to plan, users would receive a combination of crypto in their accounts, proceeds from the recovery funds from Three Arrows Capital, assuming that gets liquidated and funds are given to Voyager, that is, and shares of the newly recognized company and Voyager tokens. It's not exactly sure if this is going to make the customers whole, but at least they should be getting some money or some of their funds after this. Hopefully it's a decent amount. And it's also odd that all this is going on considering that very recently Alameda Research as well as Sam Bankman-Fried had actually given a line of credit of $500 million in cash and crypto just to help the company over. According to this too, Alameda was listed as Voyager's largest creditor in a bankruptcy filing on Tuesday with an unsecured loan of $75 million. So there are some people speculating that this will likely lead to FTX possibly just purchasing Voyager outright, as they did recently with BlockFi. So we will see what happens, and I will do my best to keep you informed. So the next thing I wanted to talk about is how Celsius paid off their MakerDAO Bitcoin loan. So according to this article on CoinDesk, it looks like the Celsius network made their final payments to their MakerDAO loan, which freed up about $440 million in collateral. This occurred on Thursday, and I cannot say how happy I am to hear this. Hopefully this brings us one step closer to having the Celsians or Celsius depositors getting paid back. Now, that being said, this is not all of their loans that have been paid off. So we're still waiting to see what's next. But hopefully this brings a little bit of comfort to Celsius holders. Now, there is one weird caveat, and it's that all of the wrapped Bitcoin that they got back from paying off this loan, as well as some other wrapped Bitcoin in their funds, has been moved on to FTX. Now, that totaling at $531 million. Now, on the one hand, there's a lot of people who are concerned that all this wrapped Bitcoin is going to get dumped onto the markets. On the positive side, there are some people speculating that this wrapped Bitcoin may be swapped into actual Bitcoin. We will keep monitoring this, and hopefully that's what happens. And this only gets weirder for Celsius. It was not done there. There's now bombshell allegations of fraud that are being brought on by Keyfi towards Celsius. Now, some of you watching this might be asking, who is Keyfi, or who are they? And Keyfi is an institution that was basically working for Celsius to earn yield on the deposits for Celsius customers. If you read down here, it says staking software and investment firm Keyfi has filed a complaint against beleaguered crypto lending firm Celsius, alleging that the company had been operating a Ponzi-style fashion that has failed to honor a profit-sharing agreement worth millions of dollars. And to make things a little bit weirder, which doesn't make Keyfi all in the clear either, is that apparently this was a handshake agreement. Accordingly, that means this contract was not brought on paper. However, for more, we can go here to James Stone's Twitter account, who is the individual that is in charge of Keyfi. And I've taken the liberty of highlighting some important points here so we can go over it. So they had discussed this partnership in mid-2020, and the wallet they were using was 0xB1. This is the one that they are mentioning in their lawsuit. And shortly after this handshake partnership, they were given over $2 billion in Celsius customers' assets or crypto assets. And Celsius had agreed to monitor the risk and performance of these strategies that Keyfi was actually doing for Celsius. Now, what gets a little bit weirder is that they promised that they were looking over these issues, and around late February 2021, they realized that Celsius had not been hedging or monitoring or preparing for the risk that came along with these DeFi strategies. Now, with that being said, it says here that in March 2021, they had actually agreed to terminate their relationship and began to unwind these positions over $2 billion. And actually, I guess he wanted to highlight how good he was at doing DeFi. He got this $2 billion in assets, and in a short period of time, added an extra $800 million in yield for Celsius customers. Now, when these positions were unwinded, there were some positions that suffered impermanent loss. If you don't know what that is, look through YouTube. Perhaps I'll make a video about it, but Whiteboard Crypto does an excellent video explaining impermanent loss, and I'll put a link down below as well as all these articles that I'm talking about. But anyways, so they suffered impermanent loss, and Celsius accused them of being thieves. Now, after a while, they accepted that this impermanent loss was a reality, and in fact that this was not theft. And so James Stone has brought upon this lawsuit because they have not yet been compensated their share of the yield that they had earned for the Celsius customers according to their handshake agreement. So with all that being said, what makes this lawsuit extremely damning for Celsius is that they are saying that this was a Ponzi scheme. In other words, a Ponzi scheme is when people deposit money in, and the company that is being deposited to is promising higher yields. However, what they're really doing is they're not really generating this yield. They're just taking that money and paying off other people with that yield in order to continue receiving deposits. So if people all yank their deposits all at the same time, this creates a liquidity crisis and eventually a crash in the Ponzi scheme. In particular, as it's written here on line 87, where in the lawsuit they detail the Celsius Ponzi scheme, it says, as customers sought to withdraw their Ether deposits, Celsius was forced to buy Ethereum in the open market at historically high prices, suffering heavy losses. Faced with the liquidity crisis, now here's where it gets juicy, Celsius began to offer double-digit interest rates in order to lure new depositors whose funds were used to repay Ether depositors and creditors. Thus, while Celsius continued to market itself as transparent and well-capitalized business, in reality, it had become a Ponzi scheme. So this is not looking good for the CEO, Alex Mashinsky. So we will keep you informed, but so far, it's not looking too good for Celsius. Now, what do I think about all this information? It's great to see that Bitcoin is on an upwards trend. I'm excited to see that. Hopefully, it will continue to go up. However, I am skeptical as it does look like an economic recession is looming, and there's also the possibility that there will be another 0.75 basis point rate hike. So we'll see what happens there. I am hopeful, but also skeptical. It's also great to see that Thorchain and Thorswap are having so many awesome updates. Atom's integration will definitely be a great addition to their list of native assets, and also the future DEX aggregator will be phenomenal as it makes it more competitive against centralized exchanges. We certainly do need alternatives, and I'm really happy to see Thorchain doing that, and congrats to the Thorchads on the performance of the Rune, native Rune token. The next thing I wanted to touch base on with Voyager, it's really, really, really unfortunate that they're filing for bankruptcy. However, if it's what they need to do to make sure that their depositors and users get their money back, then I hope it will do that. Hopefully they will get most of or be whole on their investments on the platform. Finally, with Celsius, I'm glad they're making an effort to pay off their loans. It's still not looking good with this Keyfi lawsuit, however. If all this information is true, it's important to remember that this is all alleged information. These are all allegations. Then it looks like Celsius may possibly be a Ponzi scheme, and I doubt this would give any hope to the Celsius depositors who are just waiting to get their money back. My heart goes out to all of you who use the Celsius platform. And I'd like to finish this saying, if you're worried about where your crypto is sitting on, put it in your hot wallet or cold wallet, preferably a cold wallet. Self-custody is the most important innovation in cryptocurrency. Anyways, thank you so much for watching. I hope you enjoyed this video. Like, comment, subscribe, hit the bell notification. Consider checking out our other social media platforms, and I hope you have an excellent day. Degen safely. Thank you.
Welcome to Degens for a brighter future.